Good morning, traders. Today is Friday, September 16th. My name is Charles, and this is the Pirate Traders live stream. The Pirate Traders live stream. All right. Well, things are bearish. Let's start by just stepping back and taking a look at the daily. Yesterday, we broke this uptrend that we had from those June-July lows, which were kind of the support we were counting on the market to the level we were counting on the market to use as support if it was going to be able to bounce and continue higher. So breaking below there yesterday was bearish. Closing below there was extremely bearish. Okay. That inevitably meant that this morning when people woke up, they were going to look for much further downside continuation. So it should act as no surprise that we have a big gap down. Okay. So the first order of business this morning when the market opens is going to be a counter auction to the overnight inventory. That is the market, the people who are short from the overnight start to take profit and the market works its way higher. So what we are looking for in that counter auction is where does the market find resistance? If they find resistance and they aren't able to get back up to yesterday's low, which is at about 39.06, if they can't get back up to there, if they try to push up, they get resistance and they start to head lower, that is what we call a gap and go. A gap and go is an extremely bearish signal that the market has further downside continuation ahead. Also, if we're able to push our way up to yesterday's low and we find resistance there, that is also considered a gap and go, which is extremely bearish. So pretty much the only thing that could get me feeling bullish today would be getting back up into yesterday's range and then getting back up above that downtrend on the daily. I believe that is the least likely scenario to take place today. It does feel to me like if there was ever a reason to have a gap and go, a break of major support like this on the daily would be one. So I suspect we're going to get some resistance and continue lower here today. As far as specific levels to keep an eye on, as always, the overnight low. If we break that and start to head lower, we'll look for resistance there and continuation to the downside. But if we open and find support, then we're looking for that counter auction to the upside. Okay. So I'm not going to lie, I'm pretty bearish today. Really just looking for an entry. The next major support for the market is just below price at about 38.57. Although, like I said, if we get a gap and go, we'll probably blow right through that and head down to test 38.33. That was a previous balance area high, so it would make sense for the market to find some support and at least spend a little bit of time grinding there. But if that level breaks, if 33.50 breaks, I mean, we're just monitoring for continuation lower. And we just start taking out 1 week reference after another. How low can you go? Scuba, gap and go after a spike down inside a daily trend down. Bearish. Yep. Those are literally all the most bearish signals we have. Probably why the market will go straight up all day. All right. So the market is open. The first push was to the upside. I would consider the A period low weak because they only got a tick below the open. So now we're looking for resistance. If they can't fill the gap, they're likely to come back through that opening price and head lower. Okay, so now we're looking for support here above the overnight low around 38.66. If that overnight low breaks, I am bearish for continuation as a gap and go. If you have not hit that thumbs up button yet, I sure would appreciate it. Those likes really help the channel. Start bringing in some new people. New people or new ideas. We should all want that. Smash that thumbs up. Or just gently push it. You don't have to smash it. Don't break your computer. Cortman, what's up with the soundboard? Oh, yeah, a bunch of people have been asking me to get a soundboard. So I decided, let's do it 50-50. I'll pay for half, you pay for half. Link in the description. Got 160 people here. If all of you donate $1, we can make it happen. One potential trade, I'm personally not interested in it today, but just for educational purposes, one potential trade to consider whenever you have a gap like this, if the market starts to move in the direction of the gap and then it comes back through the opening price again, you could go long at the opening price and just put your stop below the low of the day, looking for that gap fill. Again, today I'm certainly not interested in it with the negative momentum, but just worth noting. Sometimes that's a really easy trade setup. Scooball is right. Resistance at the overnight low is bearish. That's a gap and go on the NQ. That is bearish. Remain bearish as long as you're below the opening price, 11,868. If they pass back through that, they're probably trying to fill the gap. But if they can't, downside continuation. Andrew, is that based on gut or what the profile is telling you? The negative momentum? It's the profile, right? At the end of the day, yesterday, we pretty much knew this was going to happen. It was the highest probability. Why? Because we had a continuation of the downtrend. We made lower highs and lower low on the daily. We also had value overlapping to lower. So those were both a sign that the market is still trending. It's not done going down. And then at the very end of the day, we had a spike down. We actually closed literally right on the base of the spike, but that still counts as a spike. And a spike down is another signal that the momentum is still in the market. So if we have all this bearish momentum, the highest probability is that the overnight will continue to go lower. So yeah, we definitely expected a gap down today, based purely on market generated information. Nothing to do with my own opinion. Mateus, no counter auction? Not yet. They tried. They only got like 4 points. Jang, when you have time, can you explain the difference between a weak and a poor low? Nothing would make me happier, my friend. It's my favorite question to answer. So yeah, what makes a low weak? There's two different potential weak lows. So if it's at the low of the day, okay, then it's weak if it's the same as a previous reference. So for example, if we come just one tick lower here on the ES, it'll be weak because it'll be one tick away from the low from the overnight. Okay? But if a TPO within the same profile were to come down, let's say we print the B period and the B comes down here and it stops one tick from the A, well then that is poor and not weak. So it's basically weak if it's from a previous day's reference, or it's poor if it's from the same day. That's if it's at the high or low of the day. If it's within the range, then it's always weak. And the difference behaviorally between weak and poor references, weak references don't really mean much. They're there, you make note of it. They're a target if the market is moving towards them, but they're not really that big of a deal. The more of them you stack up, the bigger a deal they become. If you have a lot of weak references, then they definitely need repair. But the poor references are very potent. They're very strong. So once you create a poor reference, you can expect the market to behave a certain way, which is that it will often push away from that low and then come back and repair it. That is extremely high probability. Now, predicting exactly how far it's going to push away, how long it's going to take to come back, of course, that's random. But the behavior is extremely repeatable. All right, looking for some resistance here at halfback, 38.72. Okay, so passing back through the open price does trigger that gap fill setup I was talking about. I'm certainly not interested in getting in that trade, but technically it looks like the market wants to try once again to fill that gap. So we're looking for resistance. Man, they can't even get the ticks above the negative 1,000 line. Ugh, that's so bearish. So just so you guys know, it's rare that the market spends time below negative 1,000 on the ticks. It often just like dips below there and then comes back up. So the fact that we're spending the whole morning down there, it's a little bit bearish. All right. That's a gap and go. Pushing below the overnight low is a sign of new sellers entering the market. Entering a market that's already oversold. That's pretty bearish. Scuba poke support. Poke. Cortman today is quad witching. Plenty of shenanigans. It's very true. There's so many mechanisms affecting the market today. Should be interesting. Scott, where would you try to enter? Halfback? Yeah. Any of that resistance, that node right there, that's your entry. If you want a tight stop, you can use the opening price. If you want a looser stop, you can use the A period high. Remember, gap and goes don't often give you time to sit and think about it. If it's going to go, it'll just go. Out of nowhere, we'll just find ourselves at lower prices. Saying to ourselves, I wish I would have just got in. Corbin DM'd me a link for some bookmap education. I'll check it out, brother. Thank you. Mateus says hard to short at a negative 1,300 tick. Yeah, I mean, I hear you. The market's oversold. I get it. So if you're not comfortable, then don't get short. But the market generated information generally doesn't lie. And it's telling us there are new sellers down here. If there are new sellers and there aren't buyers, right? If there were buyers, we should have been able to fill the gap. So if there's new sellers and there aren't buyers, what is price likely to do? To go lower, looking for buyers. Scooball. In my mind, there are buyers, but they just aren't getting nothing for it. Yeah. Well, guess what happens when they get nothing for it? They exit those longs and they instantly become sellers. Yeah. I mean, somebody's trying to hold up the market. Johnny, if the TPO high ends at exactly a TPO low, is that considered weak? Yes, it is. The basic idea of weak references is it tells you who the participants are at those references, because short-term traders are the ones who buy exact levels, right? So again, we'll use the example, if we'd have stopped right at right at the overnight low, we would have known the people who put their buy orders in there, that's short-term traders, right? That's retail like you and me. And that's fine. Maybe they're enough to turn the market around and head higher. But odds are they're not, because they're short-term. So odds are if they get in and they start to push the market higher and they don't get anything for it, if they get resistance, well, they're just going to quit. They're going to exit those trades right away because they're short-term traders. They made a couple points of profit and they're out. And so that momentum that saved the market instantly disappears, and then boom, boom, you come back to repair it. And the same is true with weak references. It just means the people that bought or sold there are shorter term traders. If they're short term, they're going to take profits sooner or later, and the market will come back. McStockster bookmap finally looks normal again. Is this more normal? Has the higher volume we've had or whatever unusual? This to me looks almost anemic compared to the last few days. Where are the traders at, yo? James, going to be a lot of games played today because of all the expirations. Yeah, I don't know if I'd call them games, but it might make moves very unusual. Right? They'll be buying or selling not because they like this price level and they think it's support. They'll be buying or selling because they're rolling over one thing into another. So yeah, I mean, I don't know, games is the right term, but yeah, it might be a little trickier to read. Michigasm? That sounds more fun than a sentiment statement. Let's have a Michigasm. McStockster, well, that bookend algo ran for about a week, but yeah, now it looks like this more often. It's so funny, dude. It's like they ran that bookmap algo that bookend algo just to keep prices in a tighter range, waiting for that options expiry. Andrew. Trading used to be based on world events and weather, etc. Now it's just a game of who can screw who the hardest. Yeah, I mean, you're kind of right, but one could argue that's always been the game. I mean, you could go back to the 17th century and find these games being played. Daniel, any news today? Yeah, somebody just mentioned the Michigan sentiment survey is coming out in a few minutes. The market pays attention to that. That might give us a little volatility. John, thank you for reminding me I'm too zoomed in. I do have an affiliate link. It's in the description. All right, so this 38.56 area is the last sort of major support that the market has here. So when this level breaks, I'd be looking for a bit of a liquidation lower. And like I said, the next major support is going to be 38.33. All right, so this is obviously the reaction to that Michigan sentiment. Oh, the actual was 59.5 and they were expecting 60? Oh, no. Ah. John, another thing to watch in Bookmap is resting orders from the pre-market. The larger ones become targets throughout the day. That's a great insight. I'll watch for that. Job fan, as if Michigan has any. I think it's the University of Michigan. I think they survey everyone in the country. I don't think it's just people of Michigan. That would be funny. Corbin, what time do you crank up Bookmap? I didn't realize you had to crank it up to start getting the data. I just turn it on right as I sit down to start trading. Do I need to turn it on early? Oh, I guess so. I guess I turned it on at, well, no, I wasn't up at 8 a.m. All right, looking for resistance here at halfback as a continuation of the momentum. If we start to push up above it, particularly if we can get above the opening price at 38.74, then it would tell us that this, sentiment has changed something in the market. And so we might change our tone. But I don't think it will, particularly with the fact that the taper down here is just so thin. Surely there must be more business to be had. So I'm still looking for resistance and continuation lower. But I'll be wrong if we get back above the open. Andrew, do you only consider the regular trading hours for halfback as opposed to the Globex? Yeah, I pretty much, the only thing I really pay attention to for the overnight is like the overnight high, the overnight low, and any like major volume nodes. The smaller references within it, where the POC is, weak references within the overnight range, single prints within the overnight range, all those type of things I don't pay attention to. If I was an overnight trader, I'd pay attention to them that night while I'm trading it. But as soon as the regular trading hours opens, it's a whole new ball game. Ticks getting above the zero line is a little bit bullish. Obviously, you don't normally get that in a gap and go. Can they hold it there, or do they get slapped back down? All right, I'm neutral once again. So to get me bearish now, they'd have to push back below that overnight low and get resistance there. They'd have to prove it for me to look for another short. Chilling with Dylan. Ugh, that was a rough open. Yeah, I don't think it's over. What should be happening now, right, obviously, is I should be getting super bullish for a gap fill, but I don't feel it. I feel uncertainty, and I need more information. RK, I see Kramer dancing around in his natty bathrobe. I matter again. I do. Why? What did he make a call or something? Coop, Gap, and Goes have not been playing out lately. That is true. But, one time you'll get into a gap and go. The market will try to fill the gap. It won't. You'll get short, and then it'll just trend lower all day long. And you'll make so much money. It'll be so easy. The one hard part is entering at the beginning of the day. And then for the rest of the day, you just chill and wait for cessation. And once you get that trade one time, you will want to go for every gap and go trade ever afterward, because you'll be like, it's worth the risk. It's such a great setup when it works. Robert, I'm curious to know what your course teaches. Is it much more than the older books? No, I mean, it's pretty much all the same stuff as in the older books. Like, I learned everything from Jim Dalton. I assume you're talking about his books. So yeah, I mean, it's a lot of the same stuff, but it's just organized in a very easily digestible way. The videos are designed to be easy to understand. Like, I'm dyslexic, so for me, learning from books is like nearly impossible. So that's what I think kind of gives me a little bit of an edge as a teacher, is that I have to understand information from a weird perspective to comprehend it. So I'm able to share that information from that different perspective. But yeah, the course just teaches you essentially how to read market profile. What are all the things? How do you read them? What do they mean? And then, of course, there's a section about personal development as a trader, how you develop a strategy, how you learn to think in probabilities. I mean, that's the number one problem that people have as traders. It's not your analysis. It's not your ability to read the market and know what it's doing. It's your ability to think in probabilities, to trade like a machine, basically. Don't trade based on emotion, trade based on statistical likelihood, and managing your risk. So I think the course is highly valuable. I've gotten a lot of great feedback, but I don't think there's necessarily anything that isn't in one of Jim Dalton's books. All right, gap fill it is. Can they do it? Got a poor high here in the B period. We often get the market pushing away when it creates a poor high, looking for support, and then it comes back to repair it. Okay, there's the repair of the poor high. Market's starting to fill that gap. Okay, getting a bit of long liquidation here. Roman trans. Does that mean you're a trans person who's Roman, or you're roaming the country? He says, very strange price action this morning. Yeah, and I think Scooball nailed it. It's the four witches. So for those of you who don't understand, what the heck is he talking about with this quadruple witching? Well, it's basically just, the larger players, they use options, both to speculate and to hedge against positions that they have in the underlying assets. And so when you get to a point where there's a rollover, where those options expire, all those, investors all over the world have to make a new decision about how they want to position themselves for the next month or whatever, however long to the next expiration. And so there's just going to be a lot of decisions made today. Some people are going to be, they were bearish. They're going to be closing out those bearish trades and entering bullish ones. Some are going to be vice versa. Some were going to be heavily invested and they're going to just pull their money out of the market to be more in cash. Some are going to do the opposite. They're going to think, this is a low and we need to deploy. So there's all these different mechanisms sort of tugging at one another. And it's not really moving based on traditional TA, right? It's not like somebody's saying, oh, look, they didn't fill the gap, so gap fill or something. It's not like that. It's just they're making decisions based on fundamentals and, analysis that has nothing to do with what's happening right now. But it's just having an effect right now. So, yeah, I would expect that will explain any kind of weird moves today. Mark, does joining the brigade offer any discounts on the course, or are they separate entities? Yeah, there is a discount. If you join the brigade, you get 10% off on the course, which is like, I think, $14. So it's like if you paid $10 to join the brigade, you get $14 off the e-course. So you can think about it like the e-course gives you a month and a half of free brigade. It's a win-win. You get the education in the course, and then you get the follow-up with the daily conversation, reinforcing the concepts. I like how Roman felt a need to clarify. I just shorted it for the email address purposes. Transportation is too long. It's okay, man. We don't care. Scuball resistance inside the gap? Yeah. I don't quite have a term for what this feels like to me. I guess it's very similar to a chop zone, but you just don't normally get that with a gap. Cordman. Yeah, I guess that's a word for it. They're pushing awfully hard and they're not getting anything for it. Oh, that's great. Knapp says choppy gaps are becoming the norm from a newbie perspective. Yeah, I mean, I guess maybe over the last few months for sure. I mean, if there's any lesson to take away from all this, it's that the market behaves completely different when it's in a bull market and when it's in a bear market. And it's easier when the stonks only go up. That's for sure. Corman. I vote the toilet flush sound should be on the new soundboard. The first thing I'm going to do is I'm going to dig through some old Jim Dalton videos and find some of his like famous quotes and put those in the soundboard. Oh, that would be fun. We trade value, not price. you know what that sound means? The live stream is almost over. I think this is a brilliant idea. Giles, it seems like we haven't had a multi-day balance for a while. It runs up for a few days, then it drops for a few days, then it rallies again, bouncing around to the news and the Fed announcements. You're 100% right. It's crazy. I mean, that's why I say it just behaves differently in a bear market. Look at the way it used to do it. You know, you'd start excess, you'd start a trend, and then you would just go days and days and days and days, just higher and higher and higher. You know, think about the gap and go that you got into here. All day long, it just went straight up and it continued for a week. And then when it stopped, it just went sideways for a week. You know, it's like, oh, things were so much easier. Now it's like, but it is what it is. You got to love it if you're going to participate. All right. So as for where I will leave you as we finish the day today, I don't have a ton of clear insights. Obviously, the highest probability now is an attempt to fill the gap. I wouldn't be bullish per se, even though we're about to start one time framing higher. I wouldn't be bullish beyond filling that gap, beyond getting to yesterday's low. What seems most likely to me now is we're either going to push up to there and then go sideways, or just go sideways inside the gap. But if they are able to push back up into yesterday's range, I could start to get bullish then. They'd have to get into yesterday's range, and I'd have to see new volume, new buyers up there. Otherwise, it feels like it's going to be a sideways day. A very tricky to read sideways day as they roll over all those options. So if you're new to trading, it might not be a bad day to just take the day off. Lest you don't drive yourself mad trying to guess support and resistance here. But that's for each trader to decide for themselves. If you're not a member of the brigade, you could consider joining. It's only $10 a month, and you get to watch live streams like this all day long. If you are a member of the brigade, let's party. I'll see you on the private stream. Thanks a lot, everyone, and we'll see you Monday morning.